Hello, Assalamu alaikum. How are you, students? Okay, yesterday we have finished the second part of the structured question of O level. According to sequence, now we have to start the MCQs of AS today, inshallah. So here is your paper. Okay, now see, this is your paper. Okay, November 2019, 9706, November 2019, paper 12. Okay, move to what we need. We need tools. Yes, it's opening now. Which concept requires the profit should be based on recognizing revenues and direct expenses? Revenue expenses means matching or accrual concept. Answer. A business buys a non-current asset and decides to apply the standard method between the accounts, then forgets to include an estimate of scrap value calculation. The annual depreciation charge is too high. Yes. Annual depreciation charge is too low. Likely to be loss in disposal? No. There likely to be a profit on disposal. So B option should be the answer. Done? Okay. The table gives information relating to non-current assets of a business. Net book value at the beginning of the year, at the end of the year, net book value at the beginning of the year, depreciation charge for the year, addition cost during that. What is the net book value of disposals during the year? Now, see, book value at the beginning of the year is 16,000 plus additions 22,000, total 38,000. Okay, minus 5,000, that makes depreciation. Now 33,000 minus net book value and that 25,000. So it means 8,000 is the net book value of disposals. Okay. The accounting year of a company ends on 31st December. It purchased a warehouse for $100,000 on 1st January 2013. The warehouse had an estimated useful economic life of 25 years. The company's accounting policy is to depreciate the warehouse using the straight line method. Okay. On 1st January 2018, the warehouse was revalued at 120,000 on 1st January 2018. Now, after evaluation, what was the depreciation charge for the year ended 31st December 2018? In this question, what we have to do? Nothing. The revaluation is 1,20,000. Remaining life 2013, 14, 15, 16, 17, 5 years are gone. Now, remaining life is 20 years. 1,20,000 divided by 20, 6,000 is the depreciation charge. Not to worry at all. Move. Okay. A company prepared a sale ledger control account. The balance did not agree with the total of sale ledger balances, which were 42,650. Okay. Now, irrecoverable debt of 500 with general has not been recorded in the sales ledger, so minus 500. Bad debts. Okay. The sales ledger has been incorrectly added. This is the problem of sales journal, not the problem of sales ledger. So it is going to be the problem of control account. Again, this is the problem of control account. What about this? Sales to amount 640 has not been recorded. It's okay, plus 640. The answer is 42,790. D option is the answer. Okay. Now move to next question. Question number 6. The correction of error, which error would require an entry in the suspense account? Now see. This is an error of principle. Okay, class. Now, sales invoice 450 omitted, error of omission. Drawings were debited in cash book and were credited to drawings, error of complete reversal. So, which is what is left? Yes, D option. Okay. When you know all three options, A, B, C are wrong. So D option is left. Okay. Now the table shows information for a business 31st March 2019. Inventory, trade payables, other payables. Okay. The information excludes the purchase of 3,700 goods. These goods were delivered on 31st March 2019, but invoices state that the legal title of the goods does not pass until payment is received. Which value should appear in the statement of financial position? Now, in this question, shall we include inventory of 3,700? Yes, when you are delivered goods before 31st March 2019. So it's your goods now. So inventory is going to increase, your trade payable is going to increase. No change in your other payables. Okay, because you have received the goods. Now a business had value, sum of its closing inventory is at cost. The net realizable value is lower than the cost. What is the effect of this error on financial statement? Now, if you are not keeping inventory on lower of cost or NRV, and NRV is lower, it means you have to decrease the value of closing inventory. If you don't decrease the value of closing inventory, it means your profit is going to be understated. Getting my point? Sorry, your profit is going to be overstated, and because you have to decrease closing inventory. So if you don't decrease your closing inventory, your profit is going to be overstated. Your current assets are also going to be overstated. Now, number 9. The following balances were extracted from the trial balance of 31st March 2019. Okay. Total trade receivable 84,600. Total trade receivable 89,000. 89,000. Sorry, 84,600. Okay. Now, trade receivables 84,600. Provision for doubtful debts 1st April 2018 2835. Irrecoverable debt 1,600. There was a decrease in the provision for doubtful debts to $80 for the year 31st March 2019. What was the amount of net trade receivables on 31st March 2019? This is my calculator. Yes, my calculator. Okay. Now see. Trade receivable 84,600 minus no. Now provision is not 2835. 2835 minus 280. Now your provision is 2,555. So 84,600 minus 2,555. The answer is 82,045. D option is the answer. Okay. A business had the following assets and liabilities at the start of the year: motor car, inventory, bank overdraft, loan to friend. Now in inventory they have given cost and NRV both. We have to take the lower, the cost. Okay, so motor car is 2,500 plus 4,000 inventory. Okay, plus loan to friend 1,000. Total 7,500 minus 500 bank overdraft. 7,000 is your capital account balance at the start of the year. So B option is your answer. Done. Now come to 11. A sole trader following transaction: return outwards, carry inwards, goods for own use. What was the total effect of this transaction on the cost of sales? Now see, cost of sales decreases with return outwards and decreases with the goods taken up by the owner. It only increases with carry inwards. So 4,280 we have to increase cost of sales, and 2,750 and 1,460 we have to decrease the cost of sales, and the total is 610 increase in cost of sales. Okay, number 12, a sole trader personal expenses had been paid out of business bank account and included in his income statement. What was the effect of this profit on the capital? Profit and capital. Okay. When expense, personal expense are recorded in income statement, your profit is understated. And this is basically error of principle. It's not going to affect the capital. Okay, C option should be the answer. Okay, now 13, a warehouse was damaged by fire on 31st March and some of the inventory was destroyed. The following information is available. Inventory at cost 1st January, okay. Purchases during the period and business uses markup of 33.33%. No, C. Sales is 14,700. Sales is 133%. When the markup is 33.3, it means sales is 133.33%. So if we take out your cost is 11,025, your cost of sales. 11,025 is your cost of sales plus okay, cost of sales plus ending inventory 3,200 minus purchases 9,500 minus opening inventory 6,000. So the answer is 1275. Inventory is missing. That means this inventory is destroyed by fire. Okay. 14. P and Q are in partnership. R was admitted as a partner on 1st July 2018, and the profit and loss sharing ratio among P, Q, and R was 2:1. For the purpose of R's admission, the partners agreed goodwill would be valued at 20,000, but not retained in the books of account. Okay. Now R would introduce cash 40,000, motor vehicle 10,000. R would be entitled to an annual salary of 5,000. Now, if we talk about capital account at the start, it means we have nothing to do with this one. Okay. What we have to do, see, his investment is 40 plus 10, 50. His share of goodwill is when to removing at the time of not retaining goodwill or removing goodwill from the books, how much he will contribute to remove the goodwill? 1/6. So 20,000, 1/5 multiplied by, divided by 5. So his share of goodwill is 4,000. So while removing goodwill from the books, goodwill is going to be created and all partners are account going to be debited, means decreasing. So total his investment is 50,000 minus 4,000, the goodwill he will contribute, and his share of profit would be, his capital account balance at the start now is 46,000. Option B is the answer. Okay. Now, okay class. Now see, Hillary and Lee Cummins in partnership on 1st January 2018. There was no partnership agreement to provide the following information. In this question, you have to be very much careful. See, you have to be very much careful. See, I'm telling you one thing. In the absence of partnership agreement, we have to divide the profit equally between the partners. So option D, 4,827 multiplied by 2. So that makes the profit 9,654. The option could not be answered. 4,800 multiplied by 2, 9,600, not possible because profit is 885. 4,425 multiplied by 2. The answer is 8,850. But the thing is, if we select B option, C and D are useless. If we select B option, this is profit before loan interest. So it means if we double 425 multiplied by 2, it will give you a total profit. So where is the interest as well? Okay, we have to keep some profit for the interest also. So B option could not be the answer. So only A option is possible. So if we see, if we double A, 4,400 multiplied by 2, it's 8,800. So the 50 is the interest loan, to interest given to the as a loan to, from the loan to partnership. Okay, getting my point here. Very much careful in questions like this. L, M, N, and R partnership. L retired when the credit balance of the capital current account of 100,000 and 40,000. Partnership assets were revalued up by 60,000. L took half of the amount due to her on retirement. The other half was left on as a loan to the business. How much L was paid from the partnership bank account? How much she has to be he or she L? How much we have to pay to L from the partnership? 100,000. Okay, 100,000 plus 40,000. The credit balance is current account. 140,000. His share of goodwill. 60,000 means 20,000 is share of goodwill. 140,000 plus 20,000. 160 divided by 2. 80,000. D option is the answer. Easy. Move to 17. I'm sorry. Okay. Move to 17. The directors of a limited company recently made a right issue of 1 ordinary share for every 3 held at a premium of $0.5 per share. The right issue was fully subscribed. The statement of financial position showed the following information after the right issue was made. Issued share capital after the right issue is $1,200,000 or $1,200. Share premium is $300,000. Which amount was debited to the company's bank account when the right issue was made? Achha, this question needs a little more effort. See, I must tell you what. Now, if we take X as share capital, issued share capital before right issue, plus X upon 3 right issue, the total issue would be 1,200. Getting my point here. The total issue is 1,200. I'm not writing the 1,000 figures. Okay. Now see, this will make, if you take the LCM, the answer would be 3x plus x plus x. Okay. X upon x upon 3 is equal to is equal to 12. Then now we have x plus 3x, 4x is equal to 1,200 multiplied by 3. The answer would be 4x is equal to 3,600. Okay, and x is equal to 3,600 divided by 4. Answer is 900. So 900 was actually the issue of shares before right issue. So 900 to 1,200, the difference is $300,000, and $300,000 is the right issue. So $300,000 plus premium. Getting my point. Premium on 300,000 shares, 1,50,000. So 300,000 right issue plus 150,000 premium. Total is 450,000. Getting my point clear? Okay. Now come to 18. Fine, a company is here on 31st December. During the year 31st December 2018, it is paid the following dividends. Final dividend for the year 2017, 15,000. Interim dividend for the year 8,000. On 1st February 2018, it declared a final dividend 10,000 for the year ended 2018. Now, how much should be recorded for dividend in the statement of changes in equity for the year ended 31st December 2018? Now, this declared dividend has not yet been paid. So it means total dividend paid in 2018 is 15 plus 8, 23,000. So the answer is option C. Getting my point clear? Okay. Now, 19. Which information would an investor gain by looking at the financial statement of a business? C. Identifying future trading prospects, identifying that the amount of future dividends, identifying the entity is a going concern. Only three. There is no trading, future trading prospects or future dividends in financial statement. The following information is available from a limited company: profit from operations, profit for the year, debentures, ordinary shares, retained earning at the end of the year. What was the return on capital employed? Okay, now first we have to calculate capital employed. Capital employed means shareholders' equity and long-term liabilities. Long-term liabilities 75,000 plus 100,000 shares plus retained earning 135,679. The total 310,679. Okay, 75,000 long-term liabilities plus equity means 100,000 share capital and 135,679 retained earnings. Total 310,679. Now return, we are not going to take profit for the year. We are going to take profit from operations. 40,475 divided by total equities, capital employed, and we get the answer 13.03%. Actually, it's 13.0279. So that means 13.03%. A manufacturing business provides the following information about the product, and they want to know what is the variable cost per unit. It's very simple. 14,000 minus 8,000. The difference in unit is 6,000. Okay. Now difference in price 53,500 minus 37,000, 16,500 divided by 6,000. Answer is 2.75. Option A is the answer. Got it? Okay. Now come to 22. Where is 22? 22 must be somewhere here. Okay. Now, following information relates to inventory of business. Okay. What was the closing inventory using FIFO? Now, when you are selling these 800 units, you will sell from this one. Getting my point clear? According to FIFO. Now, how much is left from 2nd June purchases? 200 units. 200 units multiplied by 12. 2,400. Achha. 1,000 units multiplied by 13 are in inventory. 13,000. 1,000 units multiplied by 14 is 14,000. Memory release 29,400. C option is the answer. Getting my point clear? 23. Inventory cost prices are rising for a business. The company uses AFCO rather than FIFO to value its inventory. What is the effect on inventory valuation on profit of using AFCO rather than FIFO? So if you start using AFCO rather than FIFO, what will happen? Your inventory valuation is lower and your profit is lower. Simple. Okay. A company calculates its profit using marginal costing at $90,000 for a month. Opening inventory 4,000, closing inventory 6,000. The fixed production overhead absorption rate is $20 per unit. What is the profit under absorption costing? So what you have to do, difference of inventory is 2,000. Multiply by 20 absorption rate, that's 40,000. 40,000 should be added to the profit and your answer is 130,000. Okay? Okay. 25. Now, budgeted labor hours, 12,000. Okay. Budgeted overhead absorption rate, 7.5 per dollar per labor hour, or $7.5 per labor hour. Actual overhead cost, 101,250. Actual labor hours 1. So if actual labor hours work for 50,000, multiply by 7.5, the budgeted rate, we must have absorbed overhead at 112,500, but it's actually 101,250. We have over absorbed by this. So B option is the answer. Okay. Now 26. Now, a business has the following information relating to its single product: selling price per unit, variable cost per unit, total cost per unit. What is the contribution distribution? What we have to do? 30 minus 14, only variable cost. Contribution is 16. 16 divided by 30 is 53.33%. The answer is option C. Okay, we have nothing to do with the total cost. Okay. Now 27. Wonderful question. A company makes 3 products for which the following details are given. Now see, X, Y, and Z. Selling price, direct material, direct labor are given. What they want to do? The same material is used to make all 3 products and cost $2 per kilo. Okay. There is a shortage of material. Okay. In which order should the product be made to achieve maximum profit? Now here what we have to do, we will calculate for your convenience. If we calculate contribution 40, selling price minus 18, material minus 10, labor contribution is 12 over here. Contribution is 12. Okay. What about product Y? 48 minus 24 minus 6. Contribution is 18. Yeah. 72 minus 30. 72 minus 30 minus 18. Contribution 24. Done? Now see, if we calculate if we divide the direct material cost 18 per unit divided by 18 divided by contribution 12. 18 divided by 12. This is 150%. The answer is 150%. See, if we divide direct material cost of Y 24 divided by its contribution 18, percentage is 133. 133 almost. Okay. Now, for this product Z, 30 divided by 24, 125%. So, now compare. Which has the lower percentage? Z, then Y, then X. So option D should be the answer. The lowest percentage of direct material of the shortage, whether labor or sometimes labor gets short. There is a shortage of labor, or sometimes there is a shortage of material. The shortage percentage 125 lower, so Z should be produced first, should be given preference, then Y, then X. B option should be the answer. Are you getting my point clear? Okay. 28. Last month, the company made and sold 10,000 units and a contribution of $20 per unit. Its final profit after deducting total fixed cost was 120,000. This month's sale volume is increased by 20%, so it means 10,000 multiplied by 120% is 12,000 euros. Contribution $20 is increased by 5% increase, it is 105% 21. Okay. Fixed cost 120,000 multiplied by 115%. So it's $138,000. Getting my point here? So now, how much? What is the profit for the month? See, so class, what we have to do now, see, 10,000 units multiplied by 120% is 12,000. We did it. So, right over here, 12,000. Contribution is increased by 5%. The contribution would be $20 multiplied by 105%, 21. And total profit is 120. 120. So, what is the fixed cost last month? 12,000 multiplied by 21. Sorry, 10,000 multiplied by 20. 200,000 minus 120,000 profit. So the fixed cost last time was 80,000. Fixed cost is equal to $80,000. Done. Now, fixed cost is increased by this year. Fixed cost is increased by 15%. So fixed cost this year is 80,000 multiplied by 115%, that is 92,000. So this year we have sold 12,000 units multiplied by 21, the new contribution, total contribution 2,52,000 minus 92,000 fixed cost, and the profit is 160,000. Got it? Which statement about CVP analysis are correct? Fixed cost remains constant over a long range of activity. Okay. Profits are calculated on an absorption costing basis. No. Sales revenue increase in direct proportion to output. Yes, there is only one product. Only two is not correct. So it means option C, 1, 3, and 4. Option C is your answer. The last one. Why do business prepare budgets? Okay. To communicate plans, to improve coordination, to plan annual operation, to plan long-term strategies. No. This can't be. So it means option A should be the answer 1, 2, and 3. 4 is not part of budgets. Okay. So this is all for today. I'm sorry for my coughing. Today I'm not feeling well today. Something wrong with my throat. So inshallah, tomorrow we will start structure paper of A levels. Inshallah, AS. That is in our sequence. So take care. Subscribe my channel for further videos. Take care. Allah Hafiz.